Let's go straight to the dealing rooms of IDFC Securities. Our colleague Mangalam Malu is in conversation with Anish Damania. Mangalam, over to you.
Well, so the dealing room of IDFC, Anish, we've seen a bit of a rally, in fact, quite a bit of a rally, and most of it is propelled by liquidity. You sit in the dealing rooms. What's the color of the money that's coming in from the FIIs?
Basically, what we see is that there has been over the last 3 weeks or so a huge amount of ETF flow. So ETFs have invested close to about $3.5 billion in the emerging markets, and India is typically about 11% weight on that, 9 to 11% weight depending on how the skew is. In fact, last week itself we got about $69 million worth of ETF flows. So on the back of that, you might also see some of the long onlys also investing. We are seeing a lot more traction or volumes from the foreign institutional investor business. And we are seeing some net selling from the domestics, but I think that is more to do with the small profit booking, because they have been investors ever since the market has been falling. So the SIPs probably were working at that time, and some of them probably could be booking some gains. So market has actually delivered since the budget close to 20% return on the Nifty itself. So stocks could be a lot more.
So in that case, what's your Nifty target then?
So we are still holding on to a Nifty target of 8,900. We have a year's earnings growth target of about 14% in this year, and we're just seeing how this first quarter could pan out. So if first quarter pans out and second quarter also pans out with small growth, we would kind of then see how we can roll our earnings to FY18 numbers, and accordingly that will also change our Nifty targets.
Well, as a sample of the first quarter are something to go by, you went underweight on IT as well as consumers about a month ago. Both of them have underperformed. Underperformance coming in from the IT majors as well as HUL yesterday. So what's your call on these stocks, and will Infi outperform TCS going ahead?
So in case of consumers, we were already underweight about 4 or 5 months back. IT is the one which we cut down our weights from positive overweight to a neutral after the Brexit happened, because we saw that there could be some disturbances in the budgets of most of the IT companies. That has probably reflected a little earlier than what I thought. Maybe some of the companies have already started factoring in Brexit and maybe have cautioned their plans into action. In case of Infi versus TCS, I think we like Infosys more, and the fact that it has corrected very sharply, it's now trading at about 15 times forward earnings, despite a small earnings cut which we have seen. It still remains attractive. So I think if you ask me to bet over Infosys over TCS, then I'll bet Infosys more than TCS.
All right, and you're positive on the cement space as well. Today is Ultratech results. What's your call on that, and any other mid-cap cement companies that you like?
So I think the valuations are rich in this sector, and we want to see how the earnings growth comes about. We are expecting a little over 25% growth in earnings in Ultratech, and Ultratech is a story of the cement sector consolidation as well. So we also will watch out for how that goes through, because I've seen Ultratech able to consolidate very large acquisitions very effectively, and if you look at Ultratech's story over the last several years, I think they have managed that transition very well, and I'm sure with the kind of wherewithal and the kind of capacity and the management bandwidth which they have, even this acquisition, as and when it happens, eventually, should be of benefit to Ultratech. So Ultratech is our top pick in the cement space. In case of mid-cap, I probably not talk only about mid-cap cement, but I think today in another segment, that's oil and gas, we find Chennai Petro to be a very interesting play. So if you look at the numbers, last quarter they marked down their inventory to $36. They have a 3,000 crore inventory of oil, and right now it's about 47. So 1/3 appreciation on the inventory itself would yield about 1,000 crores. And 1,000 crores would mean almost equal to the nearly 65-70% of the pre-tax profit which we are expecting for the whole year. For if you look at a market cap, it's a 3,300 crore market cap company with a debt of another 3,000 crores. So in 6,000 crores, you're getting a 11 million tons capacity. And they have set up, they modernized the unit by setting up a coker, which is going to get commissioned by the next year. So any new capacity which is setting up to this magnitude is costing anywhere between 25,000 crores or so.
Right.
So I think Chennai Petro, where we are expecting earnings to be about at least 70 rupees per share in the whole year, is trading just at 3 times. So I think Chennai Petro is going to be my favorite pick for the whole year.
All right. Always a pleasure talking to you, Anish.
Thank
That's
you.
Anish Damania from IDFC, keeping an 18,900 target on the Nifty and making a strong case for Chennai Petro.
Okay, thanks a lot for that, Mangalam and Anish for joining us.